Welcome back, traders. It's the week of August 17th, and the TSX is buzzing with opportunity. NorthFlow Finance AI has been scanning the markets non-stop, identifying 5 critical stocks you absolutely cannot ignore. Let's dive straight into the data and uncover what the algorithms are. Welcome back to NorthFlow Finance. Today we are reviewing Gold Reserve Corp, which flashed a significant technical signal on July 7, 2026. This was a pivotal moment for the chart that demanded our immediate attention. We caught a moving average golden cross accompanied by a massive volume surge of nearly 680%. At the time, this combination suggested strong institutional buying pressure was entering the market. The relative strength index was at 45.2, indicating the stock was not yet overbought despite the sudden influx of interest. This setup often precedes a substantial upward trend as momentum builds rapidly. Looking at the weekly performance, the stock gained 1.1% this week. It opened at $6.46, reaching a high of $6.67 and a low of $6.30. The share price closed at $6.53. This modest gain suggests that while the initial signal was valid, the market is currently digesting the volume spike. The price action remains relatively tight, indicating consolidation rather than an immediate breakout. Investors seem cautious, waiting for further confirmation of the trend's sustainability. In the news, Gold Reserve provided an update on the Citgo sale process. This development adds a layer of fundamental clarity to the technical picture. The market appears to be pricing in this corporate action, which likely contributed to the stable but muted weekly performance. For next week, viewers should watch for a break above the $6.67 resistance. Welcome back to NorthFlow Finance. I am your host, and today we are reviewing our second pick of 5, which is Atafos Inc., trading under the ticker symbol IFOS on the Toronto Stock Exchange. We identified a compelling technical setup for this stock on June 18, 2026, which warrants a closer look at its recent price action and fundamental drivers. The signal we spotted was a moving average golden cross accompanied by a significant volume surge of over 30%. At the time, the relative strength index was sitting at 41.8, suggesting the stock was not yet overbought despite the bullish crossover. This combination typically indicates strong institutional interest and a potential shift in momentum from bearish to bullish, providing a solid foundation for an entry at $2.58. Looking at the weekly performance, the stock gained 10.4%, which is a respectable move that partially validates our technical thesis. It opened the week at $2.21, dipped slightly to a low of $2.20, but managed to climb steadily to close at the weekly high of $2.44. While the close remains below our initial entry price, the consistent upward trajectory and the ability to hold gains suggest that the buying pressure we detected is indeed building momentum. On the fundamental side, recent earnings call highlights for the second quarter of 2026 emphasized resilient margins and strategic contract wins. This positive news flow likely contributed to the week's price appreciation. Welcome back to NorthFlow Finance, where we are diving into the third stock of our weekly review. We are looking at Linamar Corporation, ticker symbol LNR on the Toronto Stock Exchange, which triggered a compelling technical signal on July 13, 2026. At that specific moment, we observed a moving average golden cross accompanied by a significant volume surge of 59%. This combination is generally bullish, suggesting that short-term momentum was shifting upward with strong institutional interest backing the move. Although the relative strength index was at 44.3, indicating the asset was not yet overbought, the sheer volume confirmed genuine buying pressure rather than a false breakout. The market has certainly validated this original signal with a robust performance over the past 5 trading days. Linamar shares gained 3.2% for the week, opening at $105.63. The stock rallied to a high of $110.58, despite dipping to a low of $102.20, before closing strongly at $109. This upward trajectory confirms that the initial entry at $99.93 was well-timed, capturing the early stages of this new bullish trend. This positive price action aligns perfectly with recent news regarding the company's second quarter results for 2026. Linamar reported record sales and highlighted several strategic wins, which likely fueled the investor confidence we saw in the volume surge. The market appears to be rewarding the company's operational excellence and strong. Welcome back to our weekly review, where we are now looking at our fourth stock of the day, which is BEI-UN.TO. The technical signal for this Canadian real estate investment trust was detected on May 27, 2026, marking a potential shift in momentum. At the time the alert triggered, we observed a distinct MACD bullish crossover coinciding with a significant volume surge of 64.6%. This combination suggested that buying interest was intensifying as the moving averages began to favor the bulls. With the relative strength index sitting at 43.6, the stock was not overbought, leaving ample room for upward movement without immediate resistance concerns. Looking at the actual price action for the week, the stock gained 0.8%, showing modest but positive momentum. It opened the session at $64.39 before climbing to a high of $65.44. The price dipped to a low of $63.80 before settling at a close of $64.90. This performance validates the original signal by confirming that the initial buying pressure held firm and prevented any significant pullback from the entry point. On the fundamental side, we have the recent headline regarding Boardwalk Real Estate Investment Trust Q2 earnings call highlights to consider. The management team likely discussed occupancy rates and rental growth, which are critical drivers for investor confidence in this sector. These earnings insights appear to have provided the underlying support needed to keep the share price stable despite broader. Welcome to the final pick of our weekly review, focusing on Blue Moon Metals, trading as Moon on the Toronto Stock Exchange. The significant technical signal for this stock was detected on May 26, 2026. We identified a classic moving average golden cross coinciding with a massive volume surge of over 250%. This combination typically signals strong institutional buying pressure and a shift in momentum from bearish to bullish. At the time, the relative strength index stood at 58.7, indicating healthy strength without being overbought, which supported the validity of the entry at $9.95. Looking at the weekly performance, the stock gained 11.6%, which is a solid move but requires careful contextualization against our entry. The share price opened at $6.81, dipped to a low of $6.53, and climbed to a high of $7.78 before closing at $7.60. Since our entry signal was triggered at $9.95, this current trading range suggests the stock has actually declined significantly since the signal date, meaning the original bullish thesis has not yet materialized in price action. On the news front, Blue Moon Metals recently secured a crucial water pollution control permit. This regulatory approval removes a potential environmental hurdle and demonstrates the company's ability to navigate complex compliance requirements. Such progress often helps stabilize investor sentiment, which likely contributed to the positive weekly momentum despite the broader price weakness. For next week, viewers should watch to see if. That's our weekly review. Subscribe for more insights. Remember, this is not financial advice. Thanks for watching, and we'll see you next week.